something changed, and most people haven't fully caught up to it yet. The way you've been taught to think about taxes isn't wrong, but it is incomplete. Because in the background of investing, something important has been shifting. I'm Hilary Hendershott, founder of Hendershott Wealth Management. We publish content to help you strengthen your financial life, grow your net worth, and feel supported through the moments that matter. If that's the kind of guidance you might be looking for, please take a moment to like this video and subscribe to my channel. Let me show you what this actually looks like because we have seen this pattern before. Technology improves gradually for years and then all of a sudden the category changes. Think back to 2007. Before the iPhone, a good phone meant better battery life or a slimmer design. Then almost overnight, it became something completely different. It wasn't just for calls anymore. It became how you navigated, communicated, worked, and lived. That shift was not incremental. It changed how people used and relied on phones entirely. Something similar is happening in investing right now, not in what stocks we invest in, but how we manage taxes inside a portfolio. For a long time, taxes were treated like a fixed cost, something you try to minimize around the edges. You harvest a loss here, you defer a gain there, but fundamentally, you accept that a meaningful portion of your returns will be lost to taxes. That model made sense when there were fewer tools available. So the focus was on better pre-tax returns, not how much you get to keep. But here's the shift. There's only so much additional return you can reasonably expect from the underlying investments themselves. Markets are competitive and information is widely available. So for many high earners, the next meaningful lever isn't chasing better performance. It's increasing what you actually get to keep. And that leads to a different way of thinking. Tax strategy is no longer something you layer on after investment decisions are made. It can be integrated directly into how a portfolio is designed and managed, not occasionally, continuously, and proactively. So instead of reacting to taxes, you can start to shape them, not eliminate them, but control when and how they show up. And when you do that, something important happens. More of your capital stays invested for longer. For example, imagine you have a $2 million position in company stock. That company stock has done well. You have significant gains. If you sell it all at once, you could trigger a very large tax bill immediately. So now you're reinvesting a much smaller amount of capital. But if that same position is managed over time with a tax-aware strategy, more of that original capital stays invested and continues compounding. And over 10, 15, 20 years, that difference isn't subtle. It can mean millions of dollars of added wealth for you. Now, to be clear, this is not about finding a loophole or chasing something speculative. It's about recognizing that portfolio construction itself has evolved. And for investors with meaningful taxable assets, that evolution matters. Because if your strategy doesn't account for taxes from the beginning, it's leaving something on the table. Not because you made a mistake, but because the framework itself is outdated. Sometimes things fundamentally change and what's possible expands. At Hendershott Wealth Management, this is the lens we bring to portfolio design. We call it ultra tax efficient wealth management. It's not a product, it's an ongoing process that integrates tax awareness directly into every investment decision. If this way of thinking feels different from how you've approached investing in the past, you're in the right place, because this is exactly the kind of shift that can mean significantly higher long-term wealth for you. And for many people, this is also the point where they stop trying to figure it out on their own. Not because they can't, but because the stakes are higher and the decisions start to compound. So if you're looking at your own situation and thinking, I'm doing well, but I'm not sure I'm doing this as well as I could be, that's usually the right moment to have a more structured conversation. If you'd like help thinking through how this applies to your situation, you can go to hendershottwealth.com and click schedule a call. Fill out the contact form there. That's the best way to start a conversation with our team. It's a thoughtful, low pressure conversation focused on understanding your situation and whether there's an opportunity to improve it. Thank you for being here.